Hello, everybody, and welcome to this week's podcast for the week of September 3rd, recording this on Wednesday instead of Thursday. So hopefully this will come out on Thursday morning here. I'm joined by good friend and colleague Joseph. How you doing?
Doing well, doing well.
You have a nice Labor Day?
I did, yeah. And it already feels like everything's picked up after kind of the slower summer months.
Yeah.
You're right back
Oh
into
yeah,
it.
phone lines start picking up a little bit. Everybody's like, "Oh man, I got to go back to work. We can't just go to the beach all summer."
Yeah.
One fun thing about this week, start of football season. I know both you and I are big fans of football. I'm sure if you are listening, obviously maybe some of you are football fans. Neither one of our teams really have a shot this year, Jets and Saints.
Yeah.
So it's going to be the toilet bowl for us.
We like to suffer together.
Exactly.
Misery loves company. So yeah.
We just come in on Monday and we're like, yeah, did you catch the game? And we're like, no, it wasn't worth it. But there's a lot of analogies that we typically make with sports. I'm sure we're going to put that into the report as things get, kind of get going with sports season. But the idea is that, sports teams, winners keep winning, stocks keep winning, right? So that relative strength aspect of it. Another thing that we typically look at in terms of, winners keep winning and long-term relative strength is this idea that you kind of came up with, which is RS or relative strength aristocrats, right? Looking at stocks that have done really well for a really long time, right? So to actually quantify that, we can put or pit stocks up against the equal weighted index, which is a benchmark. And then if we're on a buy signal, right, that means that we're doing better than the benchmark, which in this case would be the S&P 500. Now, there's a list of 34 names. Hopefully you've got the list in front of you because I don't, but there's a list of 34 names within the S&P that have traded on a buy signal for more than 10 years,
Mhm.
right?
Yeah. And the idea is just winners kind of keep winning, but
Yeah,
like these are really the elite of that club. I mean, some of these, so WR Berkeley, that's been on a RS buy signal since 2000. So
right.
it's been since July of 2000. So it's been over 25 years now that it's been on a relative strength buy signal. And there's a lot of common names you would kind of MasterCard, Visa, Apple, Google. Um, so and typically, the performance is pretty good in those
Yeah.
those ones that have been on RS signals for a long time. Now you could say, well, there's some bias there because they've been on RS signals for
Right. Of
so
course they're
long.
doing better, right?
Of course they're performing better.
Yeah.
But when you look back, I mean, some of these names have been on here for 20 plus years.
Yeah.
So even after that first 10-year period, it can still kind of continue to do really well.
Yeah, and it's not a foolproof system. I think, there's 34 names of them. 33 are actually outperforming the market over that time frame. Honeywell, I think HON, if
Yeah.
I remember correctly, is the one loan that's underperforming. This actually gives us a really good opportunity to highlight the rest of the technical attributes, right? Because it's really easy to say, oh, well, you're doing better than the market for 10 years. You should definitely be outperforming, right? But there are instances where you want to pay attention to other technical attributes because they can highlight, that stocks are or aren't doing well. So, for instance, Honeywell is technically a 2 for 5, or one of those attributes being against the broad market, but it lacks in other technical facets, right? So it would technically not be a buy by Dorsey Wright standards simply because of that TA score. I just want to throw that caveat in there.
Yeah, and again, what we're trying to do is just stack the odds in our favor. We're never going to get a guaranteed
Right.
thing, right? But if we're slightly right more often than we're wrong, that's kind of like what the goal is. Even
Yep.
50-50, if the gains that you get from the ones that actually work out are that much bigger than the losers,
Right.
right? Which we want to cut as short as possible, which is kind of the two-pronged part of the methodology where we're owning the strong stuff, but we're either avoiding or selling things that become weak.
Right.
Yeah.
Well, that's a good point. I mean, what we'll do is what we wrote a research piece about it. That's where this kind of data comes from. We'll throw the link to that and the foundation website. We'll throw that link in the description. Feel free to go check that out, read that article. I think if you're on the foundation site, you get one free article a month or something
Yeah.
like that. Oh, so that's a pretty
And this would
perfect
be a
read.
good one.
Yeah,
This would be a good one.
exactly. Next, talking about, you just mentioned stacking the odds in your favor, things continuing to do well. An area that has done pretty well so far this year, technology, and more specifically, AI,
Yeah.
right? talking about that a little bit more, you can take a look at artificial intelligence, all those buzzwords that people love about our AI and things like that. But so far in 2025, technology a real leader, right?
For sure. Yeah. And most of the stocks have done well for a long time, but they've really picked up since that kind of April low and taken back some of the leadership they may have lost near the end of last year or earlier this year. One of those is Google or Alphabet.
Hmm.
Um, Really strong picture, 5 for 5er. And this is one that kind of lagged the market for a while until the last couple of months.
Right.
And then the news came yesterday on Tuesday that they had a favorable ruling in their antitrust case. They're not going to have to sell their Google search
Right.
arm of their business. And one of the main reasons the judge cited for not doing that is the emerging competition from AI players in the search engine game. So the AI continues to kind of be a theme as a disruptor in a lot of ways, whether it's in the labor market or just in something like search engines.
Right.
So there's a lot of stuff there. I know you're going to be featuring a piece in the report today about some quality AI names. First, just looking at Google's technical picture, up like almost 8% today, over 8% at one point.
Right.
New all-time highs. Now, maybe the market may have front-run this decision and thought it was going to happen because it did hit a new all-time high last month
Right.
before the decision even came out. So I wouldn't be surprised if they were kind
No,
of
it's not
baking.
possible,
Yeah,
right?
they were maybe baking in that they were
Yeah.
going to get a favorable ruling. Another beneficiary of this ruling was Apple. They were up not 8%, but about 2.5% at the high point today, maybe even more by the time we get finished at this recording. Um, just it was just generally viewed as a favorable ruling for some of these larger companies like Apple that people have tossed around antitrust suits
Right.
against them before. Um, and then when we look at some other AI names, I know you were talking about. Um, an ETF that kind of focused around AI names. If you want to talk
Yeah,
about that for a
I
second.
actually have a question for you because I've got my own opinion, and this is on Google.
Hmm.
The saying that you'll hear around the Dorsey Wright office is, well, it could always get more overbought, or it could always get higher. How do you specifically look at that chart? I mean, obviously Google at all-time highs. It's a 5 for 5er, so technically strong by our standards. How do you go about and say, okay, well, hey, should we be buying this here? Should we be just holding here? What does that look like in your process? How does an advisor kind of go about that as they're looking at that chart?
Yeah, I think if I own it, I'm not really worried about selling it at this point. Again,
Yeah,
it's strong, it's doing well. We don't want to sell things that are doing really well. It's a
right,
5 for 5er. Now, if I'm going to look to enter a position or add to a position, am I doing it right here? Probably not.
right.
I mean, you're up 8% in a day. Usually there's some come down after
Yeah,
that. We're also well above the top of the trading band, so over 100% overbought on a short-term basis. So this comes down to kind of like trade execution versus do I stick with a trade I'm currently in right now?
right.
I think you're still sticking with the trade right now because we're focused on kind of intermediate and long-term trends. From an entry point standpoint, I think you probably just wait for a better opportunity.
Yeah, no, I mean that makes sense. And this is a good problem to have, right? You want your stuff to be too overbought. You want your stuff to be 8% in a day, up 8% a day.
Mhm.
But always good because, functionally people are seeing it in the news and we preach cutting through the noise and everything like that. So just kind of approaching, hey, how do we deal with holdings or potential holdings around those points is always a good thing to do. You mentioned AI and kind of a focus piece on AI. AIQ is the fund that we'll throw up on chart. Maybe this is our third or fourth chart. I don't know what it is at this point. But AIQ is kind of a focus name. I think it's through Global X, and they've got about 90 AI focused or adjacent names. Now you've got your big players in there. You've got your NVIDIAs, your Palantirs. There's a lot of other names actually underneath the hood of that look pretty good. I mean,
Mhm.
you look at semiconductors in general, they have had a relatively productive 2025, especially off of those lows back in April. And they're participating quite well in terms of where contribution of upsides coming underneath technology. So semiconductors are a real leader there. So, I mean, you look at that AIQ chart, it's pulled back a little bit, but it's got support localized, I think, just under the middle of the trading band, which we'll highlight. So overall, strong fund score, strong sector, strong backdrop. how many times can I say strong? It looks pretty good,
Yeah,
right?
it looks really strong. And one of the things I was looking at the whole as I looked through the holdings of this, it's not too top heavy.
Right.
Nvidia's 3% of this, Microsoft's again like 3%. But you get some other names in there like Oracle's, a little under 4%. Um, Still a bit more of an equal weighted format. So I think that could be I tend to like that when you're doing these sector plays, right? Especially in something that's AI, which is really growing. Like, some of the winners right now, like is Nvidia and Palantir and those
Right.
sorts of names, but there's definitely going to be some dark horses that kind of come out of the woodwork and really just start to take over, and having at least some relevant exposure to
To
those
those guys.
possibilities
Yeah.
is good.
And the opposite side of that coin is also true. I mean, there's a lot of people, clients will call us all the time and they'll say, "Oh, I really like this, you know, small cap stock or whatever, whatever it may be." Sure, but the chances that that's the one versus having exposure to all of them, it's neither here nor there. So having a little bit more of an equally weighted fashion, or asset allocation to a sector that can move around quite frequently can help smooth out that ride.
Yeah, sure. And especially I think the emerging leadership coming out of the AI space, I think we're pretty early in that cycle too.
Right.
Whereas like, you're looking at the equal weight S&P 500 versus the cap weight S&P 500, and the cap weight's just knocked the socks off the equal weight over the
Right.
last, couple years.
Yeah, a couple at least, right?
Yeah, for a little while.
Yeah.
And that'll probably change at some point, but there's really no signs of that changing just yet.
Yeah. Price will
But
tell us.
yeah, price will tell us. Price
Yeah.
will tell us.
Talk about maybe not emerging leadership, but a blue blood of think back all the decades, Cisco, right? One of those names that is kind of AI adjacent, excuse
Mhm.
me, that we wanted to highlight. Cisco, a 3 for 5er. You've got the chart pick pulled up in front of you, but it's recently broke back into a positive trend, stormed up to some multi-year highs, maybe all-time highs, and then kind of pulled back and established some support nearby. So that could be an option that looks relatively strong, even though it's only a 3 for 5er,
Yeah,
right?
it's a 3 for 5er, but I like how the charts formed, which I think when it comes to like a 3 for 5er, that's where the chart reading kind of really
Right.
comes into play. Um, Broke out of some resistance in the mid 60s. That's been there for a few years. Came back and retested it. Found support right there where you would want it to, and has reversed back up into X's. It's very actionable right now, near the middle of the trading band. And believe it or not, we still have a little while till we get to all-time highs, which was $82 in March of 2000.
Yes, how could I forget about the all-time highs of March of 2000? No, it's just definitely, an option. And listen, you go out and you pick up exposure, not to say that Cisco isn't a well-known name, obviously, right? But as you enter in these client meetings, you say, "Oh, well, let's just go pick up more NVIDIA." That's not that fun to talk
I mean, you
about,
can buy
right?
the S&P
Yeah.
500 and get enough NVIDIA, right? You
Right.
know what I mean? You get 8% in NVIDIA. It's not too bad.
Yeah, $8 of every 100. That's maybe a discussion for a different day. But the,
Yeah.
the point is that like having a list of actionable ideas that aren't just the exact go-tos, the Magnificent Sevens. Cisco is certainly a well-known name, but having it kind of a satellite play that isn't just NVIDIA and Palantir probably makes sense for those
Yeah,
conversations.
or just you could go with the broad-based exposure of like AIQ or something like
Right.
that.
Yeah.
Exactly. Yeah. So I think getting back into more macro talk, gold.
Oh yeah, I forgot about gold as one of our
Yeah.
charts. Yeah, good gold.
I was trying to save you there without
Yeah.
having,
Just letting them know.
but yeah. So we were going to talk about this one as our second chart, but we'll slot it back near the end. GLD broke a quadruple top to reach a new all-time high this month. It's now heavily overbought, but when has gold not been heavily overbought over
Right.
the last year or so? It just continues to march higher. Um, I don't know really what else to say about it other than it's looks great and it's been doing great.
Yeah,
So
I saw some interesting chart. Maybe you can pull up the performance over the last 2 years. It's like double the S&P or something crazy.
yeah,
Speaking about how strong the S&P has been over the last couple of years. And then you've got gold, which is up, double that. And you're thinking, well, haven't we been in a bull market? And, you've got like a traditionally defensive asset like gold outperforming the
yeah,
S&P. It's like it doesn't really make sense. But obviously, not everything always does make sense, but price, going back to that idea, price tells you when things does do or don't make sense. And so gold GLD, like you mentioned, getting that breakout there to new all-time highs, nice support level as well below.
Yeah.
So yeah,
I think that's one of the big things is, if you look at GLD's chart, I mean, there's really not much support, or there was not much support before this kind of consolidation over the
right.
last few months. I mean, there was support at 240, but you were, trading up at 300, and then below 240, there wasn't any support until 184. So that's like the run that this thing has been on. I mean, just
Right.
it was a stem, slight pullback, and then another stem. And now we have a more of a general area to lean on around 295, 300 on GLD.
Right. And then you get the pull. I mean, the next test, right, is going to be if we get a pullback, how stiff is support at those previous highs, right? That
Yeah.
would be kind of, we couldn't break through this point a bunch of times. Now we broke through it. Let's see how stiff that is down there.
Yeah. And then I think lastly, just talk about rates for a second. Obviously, people are talking about the Fed cutting rates in September. It's not a foregone conclusion, but right now we're at the market's pricing in the 95% chance of a 25 basis point cut.
Sure.
Um, Now, yields have headed a little bit lower here over the last few months. TNX, the 10-year yield index, two consecutive sell signals, moved to a negative trend. Although we'll say it's kind of just bounced between positive and negative trend.
Right.
Really, we're just in kind of this big range right now when it comes to intermediate and long-term yields. Uh, so we'll see what the Fed has to say. Obviously, the economic data is going to continue to come in. Um, Now, those looking for two rate cuts by October, looks like there's about a 50-50 chance that we get another rate cut in October or
Flip a coin.
not. Yeah, flip a coin. So we'll see how things continue to develop. And it seems like every other day we're getting a headline where the inflation reading's high or the inflation reading's low, labor market's weak. I know the
Right.
yields job data this morning came in pretty soft. But then, you'll get a positive data point as well. So until we really get a clear indication on the economy, even if we do get some rate cuts, I don't expect longer term yields to move that much just yet.
How long have we been saying we're waiting for a clearer picture?
Yeah.
It's been
And
a
you
little,
pull up TNX's chart and it's just chopped
yeah.
since 2023. I mean, there
Just
hasn't,
pretty much around news reports, right? It's
yeah,
just
yeah,
like,
yeah.
oh, that, but obviously, I mean, yields and rates in general, they're going to impact a wide variety of different asset classes from domestic equities to commodities to, other alternatives, a dollar, whatever it may be. So there's obviously a lot waiting in the, what is the word?
Cold.
Yeah, sure, whatever. But waiting just to kind of see what happens throughout the rest of the year. We didn't touch on it today, but September historically relatively choppy, right?
Mm,
I think it's one of the only months on average to be negative. So that could certainly come down the pipeline here.
yeah.
So that's a lot happening over the course of the next couple of weeks and a lot of hopefully fun podcasts. Let's put it that way over the
Yeah.
next month.
I think the next couple of months are going to be pretty interesting.
Yeah,
Um, Obviously the tariff ruling is going to go to the Supreme Court.
right.
That's probably going to have some implications, right? I would be surprised if they did not rule in favor of the current administration and side with them in
Right.
terms of tariffs. Now, if they don't side with them, I do think you're going to see some stuff really start to move around, probably to the negative side at first, just because people have kind of digested the
Right.
tariff
That's already
regime
priced
at
in.
this
Yeah, yeah,
point.
yeah.
People that hasn't really completely broken everything just yet. Not saying that it will, but it hasn't, been a disaster economically or anything like that.
Right.
Like some people were expecting, in March and April, where we were really seeing a ton of softness there. Um, so I think I could see that being a potential type of event. And then another thing to watch, I think, is the dollar. We briefly mentioned the dollar, but that's really just kind of continued to move lower, four consecutive sell signals. But it does seem to be kind of stopping and may turn around. And I think that if it does start to turn around, that obviously has implications for international equities, which have been an area of strength so far this year.
Right.
So we'll see what happens there.
Well, rates moving lower, right? That would be a headwind, right, for the dollar,
Yeah.
which would then also be a tailwind for international equities with a weaker dollar, right?
Uh,
Yeah, maybe.
Maybe
Yeah.
I could see I can see lower interest rates being a tailwind for a dollar in a certain macro backdrop.
Okay, we'll leave it there.
Yeah, it's usually
Well,
because it
okay,
could mean money's flowing into the U.S. buying U.S. debt if interest rates are lower.
fair. Or it could mean the yields are lower, so people are.
Yeah,
I mean, it just
it
depends.
just
You can go either
depends.
way, right?
Yeah, yeah.
That's the beauty about it. Okay, well, we've rambled on for long enough. We appreciate you all joining us, and we will be back again next week to touch on any updates. Thanks.